Welcome to channel of Top Tips for Entrepreneur. This YouTube channel will give all the tips about building a successful business.
Start your business in 10 easy steps. First, develop your business concept. Most business advice encourages you to monetize something you love, but it overlooks two critical factors. It must be profitable and something you're good at. For example, you may enjoy music, but is your company idea practical if you aren't a fantastic performer or songwriter? Maybe you enjoy manufacturing soap and want to create a soap shop in your tiny town, but there are already 3 nearby. It will be difficult to monopolize the market when you're producing the same product as other neighboring stores. 2. Investigate your competitors and market. Most entrepreneurs devote more attention to their products than to learning about their competitors. If you apply for outside investment, the potential lender or partner will want to know what distinguishes you or your business idea. If market research suggests that your product or service is oversaturated in your location, consider an alternative approach. Consider housekeeping rather than providing general cleaning services. You might specialize on pet-friendly houses or garage cleanups. Then secondary research. When conducting secondary research, use existing sources of information such as census data to acquire information. Current data can be investigated, collated, and analyzed in a variety of ways to meet your needs, although it may not be as extensive as primary research. Third, make a business plan. A business plan is an actual document that acts as a roadmap for starting a new company. This document is easy to grasp and absorb for possible investors, financial institutions, and firm management. Even if you plan to self-finance, a business plan can help you flesh out your concept and identify potential issues. Include the following components in your business plan: executive summary, company description, market analysis, organization and structure, mission and goals, products or services, background summary, marketing plan, and financial plan. In our next video, we'll go over the business plan in further detail. Fourth, determine your business structure, such as a limited liability company. And when it comes to business structure, it is critical to evaluate how each structure affects the amount of taxes you owe, daily operations, and whether your personal assets are at risk when establishing your firm. As an example of a business structure, limited liability company, sole proprietorship, and corporation. Fifth, register your company and obtain licenses. Following the selection of a corporate structure, there are various legal considerations to solve. The following is a decent checklist of things to think about while starting a business. Select a business name. Make it memorable while remaining practical. There are business names and bogus business names known as doing business as or DBA. If you operate under a name other than your company's legal name, you may need to file it by DBA. For instance, Kevin's Bike Shop is sometimes known as Kevin's Bikes. The official name of the company is Kevin's Bike Shop, and the DBA is Kevin's Bikes. 6. Organize your finances. Keep your personal and business finances separate. Here's how to select a business checking account and why having separate company accounts is critical. When you open a business bank account, you must supply your company name as well as your tax identification number in. This business bank account can be used for transactions such as paying suppliers and invoicing customers, to grant a business loan or line of credit. Most banks will require a separate business bank account. If you offer a product, your accounting software must include an inventory component to handle and track inventories. The software should support ledger and journal entries, as well as the generation of financial statements. Before you are able to finance your company, you must first estimate its beginning cost. Make a list of all the physical materials you'll need, estimate the cost of any professional services you'll need, figure out the cost of any license or permissions you'll need to operate, and figure out the cost of office space or other real estate. Payroll and benefits, if appropriate, should be factored in. Businesses can take years to break even, therefore it's better to overestimate initial costs and have too much money than not enough. Many experts recommend having enough cash on hand to cover 6 months of operating expenses. In contrast, the contribution margin equals total sales revenue minus cost to make product. For example, let's say you're starting a small business that sells miniature golf for office workers. You have determined that it will cost you $1,000 in startup cost. Your variable costs are $7 per miniature golf produced, and you sell them for $11 each. Next seventh step is finance your company. There are numerous ways to fund your business. Some involve significant work, while others are more easily obtained. There are two types of funding, internal and external. Personal savings are examples of internal funding. Friends and family contributions. If you finance the company with your own money, you will have lost a portion of your wealth if the business fails. Allowing family members or friends to invest in your business risks hurt feelings and damage relationships if the firm fails. External funding may be considered by business owners who want to reduce these risks. External funding include small business loans, small business grants, angel investors, venture capital, and crowdfunding. Small firms may have to use a combination of multiple sources of finance. Consider how much money is required, how long it will take for the company to repay it, and your risk tolerance. Plan for profit regardless of the source you use. It's far preferable to earn 6 figures rather than 7 figures and only keep $70,000 of it. 8th step. Obtain the appropriate business tools. Business tools can make your life easier and your company function more efficiently. The appropriate tools may save you time, automate activities, and help you make better decisions. Consider the following tools to be part of your arsenal: accounting software, project management software, customer relationship management software, point of sale software, email hosting, merchant payment services, and so on are all examples of software. Step 9 is to promote your company. Many business owners spend so much money developing their products that by the time they launch, they don't have a marketing budget. Alternatively, they've spent so much time producing the product that marketing or promotion is a last-minute consideration. Create a website is the first promotion action. Even if you have a physical location, having a web presence is crucial. Creating a website is very quick. You can have one up and running in as little as a weekend. You can create a simple educational website or an e-commerce site to sell things online. If you provide items or services in person, include a page on your website with information about your locations and hours. Last but not least, last step, we expand your business. To expand your business, you must increase your customer base and revenue in order to expand your business. This can be accomplished by increasing your marketing efforts, developing your product or service, partnering with other producers, or introducing new products or services that complement what you already provide. Consider how you might automate or outsource certain jobs so that you may focus on growing the firm. If social media marketing, for example, is eating up too much of your time, consider adopting a software like Hootsuite to help you manage your accounts more efficiently. You might even consider totally outsourcing the time consumer. Technology can also be used to automate key corporate activities such as bookkeeping, email marketing, and lead creation. This will allow you to devote more time to other parts of your business. When expanding your firm, it's critical to monitor your finances and ensure you're still profitable. If you are not producing enough money to pay your bills, you must either cut your spending or increase your sales. As your company expands, you need to delegate work and assemble a team of individuals to assist you with day-to-day operations. This could include recruiting more employees, contractors, or freelancers. And you should also consider partnering with other businesses in your industry. For example, if you're a wedding planner, you could partner with a florist, photographer, catering company, or venue to provide your customers with a one-stop shop for all of their wedding needs. Another example is an e-commerce store that partners with a fulfillment center. This type of partnership can help you save money on shipping and storage costs, as well as get your product to your customers faster. Let's look for businesses in your field that complement what you do to locate prospective partners. If you're a site designer, for example, you could collaborate with a digital marketing agency. You might also look for companies who serve the same market as you but provide different products or services. For instance, if you offer men's clothing, you may collaborate with a tie or shoe business.
So there you have it, folks, our tips to run your business. Best luck on your entrepreneurial journey. Thank you for watching. Please like, share, and subscribe our video. See you in our next video.